Good day, traders. Happy weekend to each and every one of you. Welcome to this week edition of Market Outlook. We'll be looking at some of these pairs that would like to trade next week. And of course, as we do it, we try as much as possible to make it brief, make it very short, and we'll try to make it very short as much as we can. All right, and a disclaimer here, each of the setup or forecast that we make, I don't want any of you to just trade it without a confirmation. Okay, it is directional bias that we give here. All right, you are not expected to trade any of them without confirmation, especially in the lower entry. All right, so we start from DXY on weekly time frame. Of course, DXY is still continuing its bullish rally to the upside. You can see how the weekly candle closed last week. It closes bullish, and if you see the how bullish this weekly candle is, suggests to us that possibility of having more upside next week for DXY is there. All right, so if you check the daily time frame, you see that because of that bullish expectation, we might have some pullback here. Okay, might have some pullback here, and then we'll resume upside. Okay, that's what we have with DXY. And of course, you are going to be using the expectation that you have here on DXY, to try and to forecast other pair that are related to DXY, like euro dollar, pound dollar, and the likes, and AUD, USD, and the likes. Okay, so right now we have spotted on a bullish candlestick pattern that totally engulfed the previous one, a bullish engulfing candlestick pattern on a weekly time frame, guys. This suggests to me that we are going to go bullish for dollar next week. And of course, if you see the daily time frame, you not see that because I have said we are going to be bullish on DXY, then you just come and buy directly here. No, you can't buy here. It has to give you a discount. All right, so if you give you a discount here, and maybe the last candle you see here, you now see engulfing candlestick pattern here, you know that this buy to the upside is ready. Okay, so that's how you approach DXY. And of course, Euro, AUD, USD. Okay, right now, if you look at it, the whole of last week, it was on a selling spree. Okay, can you see? So right now, I'm seeing this as a structure. It's a corrective structure. Okay, you have this move down. Okay, you should have this to happen to break this low. That's how it will happen for this pair. You have the corrective structure right here in the middle, and then you have this move to the downside. So this is a clear case of W, X, and Y before we resume a move to the upside. Don't forget that right here, I've told you several times that right here, what we have here is an impulse. And if we take a fib of this impulse, then we should be able to have correction back to 50 to 61.8 right at this level, guys. We should be able to have a correction back to this level. Okay, so we are looking for AUD, USD to come back to around 65, around 65, yes. Come back to around 65 before we look for buy opportunity to the upside. This is just a weekly forecast, and you can see right here, you have a clean bearish engulfing candlestick pattern, and that indicates a weekly selling pressure on AUD, USD. Then when we come to the daily time frame, guys, what I would like to see is a situation where on the daily time frame you have a pullback here, and after this pullback is over, then you should have a bearish engulfing candlestick pattern here. That is where you pick it up. All right, because if you don't have a confirmation on the higher time frame, you have no business, going to the lower time frame. You see, this is what I often told people. If you have no confirmation on the higher time frame, you have no business with the lower time frame. Right now, I want to sell AUD USD, but look at where it is. And on the daily time frame, I want to pull back to this level. Okay, and even when it has made a pullback to this level, I don't want to get involved until I see a bearish engulfing candlestick pattern here. It is that bearish engulfing candlestick pattern that will tell me that corrective structure is over and the pair is now ready to drop. And when I have seen that the pair is ready to drop, that is when I'm now qualified to go to 1 hour time frame. What am I going to be checking in 1 hour time frame? I'm going to be checking the impulsive move that is generated as a result of the selling pressure, as a result of what? The engulfing candlestick pattern on the daily here. I want to see the impulse that is generated on a 1 hour time frame and look for the corrective structure back and take my trade to the downside. This is how we are going to be looking at what we call it, AUD USD. All right, it's as simple as that, guys. Then the same thing is applicable to euro dollar. We go to the weekly. We go to the weekly. All right, go to the weekly on euro dollar. Let's clear some. Okay, go to the weekly. So now, right here, what's going on here? Right here, you can see that we are bearish on euro dollar, and the momentum itself is to the downside. Okay, the momentum is to the downside. Nobody in his right senses, guys, that will look for buy opportunity, with the structure we are seeing here. We are seeing it here clearly. Momentum is to the downside, and haven't seen the weekly candle close with bearish engulfing. We should celebrate that we can from there, proceed to getting a setup for it. And on the daily time frame, you can see the move is almost gone. You can't join the sell at this level. So all we need to do is to see a correction. Let there be daily pullback to at least this level. Okay, when we get a daily pullback to at least that level, then from there we'll look for engulfing candlestick pattern around here. The essence of waiting to see engulfing candlestick pattern is to confirm the sell pressure. All right, for instance, look at this. Do you see this? You see this engulfing candlestick pattern. Why did I miss this move? When you are paying attention to details, you will miss a lot of moves, but the number of times you will go wrong will be very few, will be very limited. All right, I was expecting that this corrective structure here, okay, I was expecting this leg here to come over here higher before I get involved. But as we can see, it did not break up to that equal length before you have this bearish engulfing. This bearish engulfing should have told us that this corrective structure is complete right here, and then we should have a move to the downside. Do you understand now? So the rule, the Elliott wave rule, that says that when you have a zigzag corrective structure, it doesn't say that A is always equal to C. No, it says A is usually, that's the language, is usually equal to C, meaning that there will be some times that A will not be equal to C. Do you understand now? That is the kind of scenario we are having here. We just had a break of equal high. We took equal high liquidity, grab it, get engulfing candlestick pattern, and pull to the downside. So the question is, how could we have gotten this trade? How could we have gotten this trade? So if you mark that level, okay, if you mark that level, let's say You have this, the engulfing, go to 1 hour time frame. You can see that you have an impulse that is created as a result of that engulfing. And where's the impulse, guys? This is the impulse. What qualifies this to be an impulse? Because it broke market structure. Okay. You know, many people do not know this. It's not just a market that come down. Once it come down powerfully, you call it impulse. No. What qualifies this as an impulse is that it broke market structure. It came down and broke market structure. So from there, you look for corrective structure. All right. Right here, I missed the trade too because I was expecting this to happen for me to get involved, but it did not happen. Okay. It cut short the correction to the upside, cut it short, and then had a move to the downside. It happens, no problem. Okay. But right now, what we are expecting is simple. When market open, expect euro dollar to make a corrective structure, maybe in 3 waves or whatever. Okay. And I told you something, and I still want to tell you now that anytime you have an impulse like this, you are expecting a correction back to this level, back to 50 or 61.8, but it came to 23 or 23 or 38 and it moved down. Okay. Whenever it happens like this, guys, this is a clear example of what we call a 3-wave impulse. All right. You know, we have 3 types of impulses. I told you we have the mono waves or mono impulse. We have the 3 waves impulse, 1, 2, and 3. And we have the 5-wave impulse, 1, 2, 3, 4, and 5. Okay. So anytime you have this kind of move, this is an impulsive move to the downside, it may not create a 5-wave structure. It may and it may not. Market can come and it can give you something like this, can give you a 5-wave structure, 1, 2, 3, 4, and 5. It can give you this before it will go into 3-wave corrective structure, 1, 2, and 3, and move down. But in a situation where it does not give you this 5-wave structure to the downside, okay, the situation where it doesn't give you this 5-wave structure to the downside, what you will have is that you have this 1, you have this 2, you have this 3, and I can tell you that because we did not have a pullback, you know, a well-developed pullback here, you know, we didn't get even to 38 before we move down. The tendency is that we're going to form a 3-wave structure, and after that, you have a 3-wave pullback. That daily pullback I told you, all right, is going to form like this in 1 hour time frame, and from here you have to move to the downside. That's how you are going to be treating euro dollar when market open. Euro GBP weekly. All right. So weekly time frame. I'm really, starting my analysis from weekly because I want to emphasize once again the importance of weekly and daily time frame. Okay, actually I trade the daily time frame, all right, but I would like to add weekly for you so that you can understand why it is important to start, to even if you are not starting your analysis from weekly time frame, look at what is happening in the weekly time frame. That's what is going to give you an idea of what you are going to be trading in the week to come. Weekly time frame will give you the characteristics and the formation of the weekly candles, okay? And a well-developed or a complete development of weekly candle can give you a story of what will happen to that pair next week. So you can know how to position yourself. Like myself, it is on Saturday like this, when I finish my market outlook, that I will select the best trade I'm going to work on in the previous week. And you can see that I have to just remain focused on those 3 to 4 pairs for that week. All right. Those pairs may not qualify, for me for the next week. because what I normally check, I may not see it in them again. I may see it in other pairs. So you can see right here that you can see this candle right here. This one. You can see this candle. You can see this candle. Can you compare any candle within this range to all this? You can't compare it. So that's to tell you that the flow is to the downside. The flow is to the downside. So look at this massive bearish candle corrected by these two of this candle. Look at this massive bearish candle again, corrected by these three candles. So in a weekly time frame, I have bias for sell. For what? For Euro GBP. And if you come to daily time frame, you will see clearly. If you don't go and look at it on weekly time frame, you might be confused as to knowing what is going on. And if you look at it very well here, you will see that you have an impulse, you have a correction, you have an impulse, you have correction, you have an impulse, you have a correction. What else are you expecting, guys? You need an impulse. And that impulse is going to break this low. Do you get? It has to break this low. The trend development should continue to break this low. And that is to tell you that in a couple of sessions to come, the possibility of Euro becoming extremely weaker than GBP is there, because you are having Euro GBP as, you know, as a signal to knowing which one is weaker between Euro and GBP. Is that okay now? So then what are we expecting, guys? Are we just supposed to just place a sell when market open for Euro GBP? No, we're going to be waiting. We're going to be waiting for you to see, for you to know that sell has started. You need to see something. I always told you, when you are at the top here, you need to see an engulfing or maybe railroad track, whatever, or a clear rejection. And thankfully, this bullish candle has already been rejected. Okay, has already been rejected. That goes to show that the possibility of having this massive move to the downside is there. So all we are looking for is to see a bearish, you know, engulfing candlestick pattern, just as you have here, right here. This is what we're expecting, guys. This candlestick pattern should come here. Once it come here, fine. Go to 1 hour time frame. That engulfing candlestick pattern on the daily will create a footprint of what? Of an impulse in 1 hour time frame. Wait to see the correction back to 5061.8 and take your trade to the downside. That's what is going to happen. That's what will likely happen for what? For Euro GBP. It's a trade I'm going to be monitoring carefully. By next week, you see, of course, you know, in the week that passed, we caught the trade right from here at 84.19 or 84.17 or so. We closed here, but it still made a move to the upside. But you see that apart from looking at the weekly structure, okay, the weekly structure, if you also look at this pair, you know, with the current time frame that it is, you will see clearly that you have a corrective structure right at the middle here. Sorry, let me use this too. Okay, you have corrective structure right at the middle. I've shown this, and it was on the basis of this that we took our buy trade to the upside. This is an expanding flat, guys. It's an expanding flat corrective structure. And right here, you have a move to the upside. That is wave A, you know, and you have the wave C here. Okay, you have the wave C here. And after the completion of this wave C, guys, you have a move to the downside. You have a move to the downside. It's going to be a very big trade because it's going to cut this liquidity zone. Can you see? So when you are making your projection in terms of entry and in terms of target, you are looking at what is called liquidity. Okay, you can see at the low here, immediately this one formed and it made a move to the upside. I knew that this was going to be a corrective structure because market is going to visit this equal low again. It's going to take it out because many people that bought here for a long time, they place their stop loss here. Okay, they place their stop loss here. We are coming for the stop loss. Okay, they will think this is going to fly to the moon. No way. It's not going to happen like that. So this market has created equal low here. All right, so it's coming to visit it. All right. So what I will want you to look out for, if you cannot operate at the higher time frame, which I see no reason why you should not operate at the higher time frame, you should be watching this pair. You are going to see corrective structure right here. This market will throw up and immediately throw down, corrective structure and down again. This is the schematic that I believe is going to play out, because of course you see that this leg is a little bit higher, longer than this. All right, this is ending here. Okay, this is the corrective structure. So I want this to go up, and part of the thing that will make it to go up is that it can consolidate here, right here, and after it's going to grab liquidity at this supply zone. This is supply zone. You should look at it. When this market came down from here, did it not go down? Came down. I qualify this level as a supply level. So this market will consolidate here, throw itself up to the supply level zone, catch liquidity here, and then throw itself down. Okay, so in order not for us to be caught off guard, we are not concerned. We are not concerned on this consolidation. We are not concerned with this consolidation, rather. We are not also concerned with this, push up to catch liquidity. We are not concerned. We are not even concerned with this sell down. We want to see the first sell down as a confirmation that this throw up is a grab of liquidity. So once we have ascertained that liquidity is taken and the initial originating impulse has been established, all we need to do is to look for corrective structure back to this level, take our trade without fear. Okay, that's what I'll be expecting on Euro GBP, GBP, JPY on daily time frame, on weekly time frame rather. You should see, okay, you can also see that we have a powerful momentum to the downside. Okay, no room for buy at the moment. Just have to look for a sell opportunity. No room for buy. All right. So if you look at daily time frame, all we want to see, we can't sell right here because the move is gone. We can't sell. We cannot sell at all. But what we can do is to allow this market to pull up. Okay, on a daily time frame. Remember, we're on a daily time frame. When it pull up on a daily time frame, we could have something like this, guys. Something like this pattern right here. Can you see? Let me put another color so that you can get it. Or let me change it to this one. Yeah, I think it's showing now. You can see this kind of pattern. It may not be big, just little like this. You can see this kind of pattern right here, guys. This engulfing must not be a big pattern because already we have made the move. So it's just to confirm that we are ready to go. You will see it right here. What you see here, guys, you can see it right here after the pullback is ended. So when you see it right here, just go to 1 hour time frame, look at small impulse correction and get it. This is how you trade, guys. This is how you trade with confidence. GBP JPY. Okay. In GBP JPY, we had a bearish bias for GBP USD. We also have a bearish bias for GBP JPY, but not now. It's going to make a move to the upside. In GBP USD, I told you that it has to make a corrective move to the upside, but this has to make an impulsive move to the upside. Okay, and why do I say so, guys? You see this market is bearish. Okay, see this, it's bearish. All right, so now I want you to always remember that you need to check the flow. At the top here, what do you have here? You have a bearish engulfing candlestick pattern, and then thereafter you have this. After this impulse, you have this correction, this and this. So remember, you have created equal low here. Oh, sorry, you have created equal low here, and you have created equal high here. This is a trap. So now, if you have it this way, if the market busts down to the downside, don't sell because it's going to come right up. Okay, But in this scenario, we do not expect the market to burst to the downside. Why is it that we don't expect it? Watch. Do you notice that right here, you have a buy pressure? You have a buy pressure. This buy pressure here indicates that we need to make a move to the upside. Then, where is the supply zone, guys? Look at this big candlestick pattern. A big candlestick here that engulfed this previous one. So this market will like to come over here, okay? Because if you take a fib of this big impulse to the downside, you will see that you are having 0.618 right above here. But the market will not like to come to exact level here and turn down. No, it's going to come to break liquidity, to catch liquidity right here, right at the top here, at this level, before it can come down. So, and you can see that our reasoning for the market to catch liquidity here, is italics with the bearish, with the bullish engulfing that you see here. So what I'm expecting now is for this market to form a correction here, throw itself up to catch liquidity here, and then go down, fall down together with the GBP USD. They will now come together. So while we're expecting a bullish move for GBP JPY to complete structure, we are expecting a corrective move for GBP USD. Is that okay now? So now, if you go to 1 hour time frame right now, because we already have our engulfing candlestick on daily, look at it on daily. We already have it here, right here on daily. We have it here on daily. So now, what do we do next? What do we do next? Okay, if you look at that daily time frame, just give me a fib of that daily engulfing candlestick pattern. I want to identify 61.8, this level of 50. Okay, after you have identified it right here, then go to 1 hour time frame and see how the corrective structures is developing to gravitate towards that level. And you can see right here that we already have right here we have 1, 2, 3. Okay, you have a connector right here. You are expecting a 1, a 2, a 3. That's simple. So this is probably going to give us a W, X, and Y structure. Okay, and that will have effectively corrected this move to the upside. Okay, can you see it right here at 61.8 to 78? Because this is a WXY in form of zigzag. So I'm expecting it to come as low as 78% retracement. Okay, and when that is done, the question is, how do we now get involved for the move to the upside? How do we get involved with the move to the upside? What we just do is simple. As soon as this is done, you are going to see a move. If corrective structure is over here, you are going to see a move from here to the upside. You are going to see the first move, it will correct, take your buy to the upside. Go, where's your target? That area of liquidity I've shown you on a weekly time frame, right here, guys. Right here, weekly time. That's your target. Okay, and in that case, what do you see here in the whole of this place? Equal high. Okay, so the market is going to clear this equal high liquidity, guys. It's going to clear it to the upside, and if it has truly grabbed liquidity here, it's going to grab it and throw itself down. So corrective structure here is your trade to the downside. That's how we see it. That's the forecast, and that's what I want you to look out for. All right, Euro JPY weekly. Let's check what's happening weekly time frame. Okay, so you can see that the structure is really messy. It's messy on a weekly time frame because for 3 weeks now consecutively we have been having this consolidation at the bottom here, consolidation. But right here, you see this move, impulse, you see the correction, you see an impulse. So there is a balance of flow. I call it balance of flow between the two impulses. All right. If this impulse had not appeared, and you're having only this one, then I will tell you that the flow is down. But this impulse happened, it corrected, and you have a corresponding impulse that have taken place here. So there is balance of flow. So now we need a push. We need this market to push up because there is already a balance of flow. We cannot say the momentum is down at the moment. So we need to see a push up. And look at, everybody knows the significance of this candlestick pattern right here. Big rejection, from the downside. And then you have these two indecision candle. All I want to see now daily, if you can get engulfing candlestick pattern, I will take a decision on this trade. And how do I want it to behave? I want to see a situation where I have a bearish candle here, okay, bearish candle here, and then bullish candle, probably engulfing this one. That will give me confidence that this bullish engulfing candlestick pattern will appear with impulse on 1 hour time frame. So the correction, okay, will be my trade to the upside in line with weekly bias, okay, in line with weekly bias. But we must be careful when we get to this zone. When we get to this zone, yeah, when we get to this zone, we must be careful. The reason why you must be careful when you get to this zone is that, of course, you will see that right here, you have your impulse, you have your correction, you have your impulse. If this is not a three-wave structure, then you can have this 1, 2, and 3. Can you see? For more downside, 1, 2, and 3. So this will now follow GBPJPY in its downward move. But at any rate, we want a situation where we catch this buy to the upside. It's going to be about 300 pips or 200 pips or so to the upside. But we cannot go except we have a confirmation from the higher time frame, which in this case, weekly and daily time frame. Let this come down, give me engulfing, we look for buy opportunity to the upside. Is that okay now? Yeah. So good for UJ. Of course, you see UJ follows DXY. Can you see they follow themselves? UJ follow DXY. And you can see what is happening right here. You see the candlestick pattern that really matter that is forming right here. Can you see it? See the candlestick pattern on weekly, very bullish, bullish engulfing. But right here on the daily time frame, you can't say because you saw a bullish engulfing candlestick pattern on weekly and you now start to buy. No, you have to wait. Allow this market. I do allow it to come down. Once it come down, I'll be watching. You know, it will be bearish, 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 bearish. If I now see bullish here, bullish engulfing here, I know that yes, this confirm my directional bias on the weekly time frame. Once I see it on the daily, I say, oh, that's beautiful. I just go back to 1 hour time frame, guys. Okay, you are not permitted to trade this pair until it come down. Anything it's doing here is none of your business. Let it come down here. That's where your discounted price lies. So you want to see an impulse here, correction here, and you take your trade to the upside. Is that okay now? So that's how that's how you approach this one. USD card. You see USD card. If you look at it very well, the same thing is applicable all USD denominated pair. Can you see that right here? Right here you have this. Right here you have this. But if you look at the flow, you see that right here, what you see here, you see a bullish engulfing candlestick pattern that tells you that your move to the upside is not negotiable. Once I see this, after the close of the market, I take this to be an impulse. This is my correction. I want to make a move to the upside. That is on the weekly time frame. Then on the daily time frame, what is it doing? Okay, what is it doing on the daily time frame? You can see that I'm already saying this is a corrective structure. Okay, this is corrective structure, and then we need this move to the upside. Now, how do I want to approach it? Do I just start buying at the level where it is? No, I can't just buy at the level where it is. I want this to step down. If it's still going up, then I'm not involved. All right, I'm not there. Tell them you don't see me. Okay, I won't take part. Okay, but I want you to calm down. On a daily, remember, on a daily, possibly coming down to this zone, guys. Coming back to this zone. Okay, it's only when it has come back to this zone, give me engulfing candlestick pattern here, then I will know that I've achieved an impulse, I've achieved a correction, I've achieved a move, I've achieved a correction, I've engulfing, I go to 1 hour time frame. This engulfing that it produces on the daily time frame is going to give you an impulse on 1 hour. Okay, it's going to give you an impulse. It is that impulse that you look at the corrective structure, come back to your entry time frame, 1 hour or 15 minutes. This is where you're going to place your buy to the upside. You see, risking like 15 pips or 20 pips. Take your buy, boom, to the upside. See, this is how you do top-down analysis, guys. Top-down analysis. EUROCAD. EUROCAD. Can you see EUROCAD? All right. Right now, do you see we have this equal high? We are still going to visit it. Okay. But right now, you have this candlestick pattern that show us this railroad track. Okay, that's one of the candlestick pattern that matter that I really use. All right. So I want this market to come down based on weekly. Then I look at daily. If you don't look at weekly, you will not see a clearer bias sometimes. I noticed that, when you just rely on daily alone, you're going to be missing a lot of trade because the directional bias might not be clear to you in most cases. Daily might not give you the right directional bias, but weekly will give to you. And if daily does not give you, step up to weekly and see what weekly is doing. Right now, we have it. We are going to have this move. No matter what, we are going to have this move to the downside. But are we to sell immediately? No. So the clue on where to sell, you get it from the daily time frame. Because right here, the market is about getting to the support. So how can you be selling at a price that is very close to the support? So what we're expecting right now is simple. On a daily time frame, there should be a pullback here. And after we have gotten this pullback, guys, we now expect to see some candlestick pattern that will indicate a sell pressure, like something like this, guys. Let it come over here. Once it come over here, we go back to 1 hour time frame. This bearish candle will give us an impulse in 1 hour. The correction of it, the end of correction of it will give you a trade to the downside. This is how you monitor the setup. Okay, right here, Euro AUD, you see weekly. If you look at weekly now, you see that it's not creating a setup, rather you have equal low here. Okay, and then right here you have a sell pressure right here. And I told one of my mentee yesterday while we're discussing candlestick pattern. Okay, and I gave a lot of secrets, that wow him concerning candlestick pattern. Look at it here. What candlestick pattern do you see here? That's bearish engulfing. What candlestick pattern do you see here? That's bearish engulfing. But guys, this is what we need. We don't need this. You can't give me a sell pressure at support. It's not going to work. If you want to give me a sell pressure, give me at resistance, not at support. So if you see a bearish engulfing candlestick pattern, a bearish one at support is not important. This one is very important because it's at the top. Okay, this one is very important because it's at the top. This one is very important because it's at the top. This one is nonsense because it's at the bottom. Okay, so a bearish engulfing candlestick pattern at the bottom of a chart has no significance. It has no value. Do you understand? So having seen this, I want to go back to daily. I want to go to daily, but you can see, as I was telling you, in weekly time frame, you were seeing bearish engulfing, but in daily time frame, you didn't see such. Instead, you are even seeing a very powerful bullish candle. So what I want to do now is, what I want to do right now is to see how this can be corrected. corrected to this level, I will take my buy, ignoring the bearish engulfing candlestick pattern I spotted on a weekly time frame. And if you look at the 1 hour time frame for this pair, we are going to discover something that is very, very intriguing. Okay, right here, I believe the liquidity has been taken. Okay, liquidity is grabbed. When you have a wedge, guys, let me teach you something special this afternoon. When a market is coming down, you now have a wedge and a breakdown. Okay, this wedge, when you have a breakdown, you have taken liquidity. If you have a sharp up again, all you are looking for, guys, is corrective structure to go up. This is a pattern, guys. You can take this pattern to the bank. It works for all instruments, everything. Take it to the bank. So what do you have here, guys? You have a wedge formation, guys. You have a fake out. Many people are selling, fake up, and sharp up. Okay, all you are looking for is corrective structure to buy. And can I show you the corrective structure? Yes, it's forming clearly. All right, look at it, guys. You see the impulse. What do you see here? Consolidation, which is the correction. So what I'm expecting is that this consolidation here should break up to the upside, take liquidity from here. If you take a fib of this level, then you will see that this is 50 to 61.8, guys. Okay, and then this will also be a confirmation of the pattern, wedge pattern I showed you, guys. You can have an impulse, wedge pattern, okay, wedge pattern, break up to the upside to catch liquidity. Some people say it form an M, shut down, corrective structure, down again. Where is it going? It has to correct a three-wave structure as a correction for this powerful move to the upside. Okay, powerful move to the upside. Around this level, we look for impulse, correction, and up again. It's as simple as that, guys. So this is what is called structure. You know, you have to combine Elliott wave theory, combine it with demand and supply, and then liquidity. Once you blend these three together, you always know what to do at every point in time. Cat CHF on a daily time frame, okay, on a daily time frame, on weekly rather. You see, weekly is giving us no clue as to what is happening right now in the market. The only thing we can say is that we have a massive engulfing candlestick pattern here, which must be corrected, guys. Even if it has to go down, it must be corrected. Let's look for daily and see if we have a clue. You can see on coming to daily time frame now, the only clue we have is that number one, you have this move to the upside. You have three-wave move down. You expect this move maybe to break this top, okay, before you can take you can get a sell setup to the downside. That's what we are expecting for this. But how do we approach the buy? If we have to buy, guys. How do we approach that buy? You can see that right here, you see this. You should always look at the middle to see your structure. Okay, you see 1, 2, and 3. Then you will need 1, 2, and 3, or 1, 2, 3, 4, and 5. If it is 1, 2, and 3 here, it means you have three-wave structure here, three-wave structure here. Somebody will say, why am I saying we have three-wave structure here? Let me draw it for you. When you have an impulse, 1, 2, and 3, this is one wave. These three waves in the middle is one wave. This is the third wave. So this is A, this is B, this is C. Is that okay? Take all this representation here as what you have here. And that's what makes it a three-wave structure. Is that okay now? Now, right here, you have 1, 2, and 3. You have 1, 2, and 3. You're expecting 1, 2, and 3. And that becomes a WXY structure. But if you have 1, 2, 3, 4, 5, then this has become a 3, that's 3 here, a 3, that's 3 here, and a 5. It's a 5-wave 3, 3, 5 structure, which is what we call ABC structure. The difference between ABC structure and WSY structure is that WSY structure has a 3-3-3 structure. 3 waves here, 3 waves here, 3 waves here. While ABC structure has 3 waves here, 3 waves here, 5 waves here. Is that okay now? All right. So right now we're having a bullish engulfing candlestick pattern here at the support after the completion of this correction. So all we have to do right now is to check what I want to wait for. I want to check this candle that is coming. I want it to come right here. I want it to come right here. Yes, I want it to come right here. You can see for how many days? For like 3 days, the market did not leave this place. So when I come to 1 hour time frame, I want to see how corrective structure develop back to that level. Let me see how corrective structure develop. And again, you also want to check that right here you have your impulse. Right here you have your impulse. Then somebody will ask me, what qualifies this to be an impulse? Because it broke a market structure. Yes, and you can see the wedge formation that I told you. It's a wedge formation, and when you have this kind of pattern, a wedge formation close to demand, what it does is to take liquidity from the low and then shut up. Okay, this move to the upside has broken market structure. Okay, and for the fact that it has taken market structure, it is qualified to be called an impulse. All right. So what we have to do right now for this setup is to take a fib of this impulse and mark 50 to 61.8. Mark this level. Okay. I was thinking this pair is ready to move, but after a closer look, I discovered that it's not ready to move. Okay, and when we draw this box, you can see that right here you have this correction. You have this 3 waves down, 3 waves up. You need a 3 wave down. This is 1, this is 2, this is 3. We want the 3 to come, break this low, tap liquidity here. And if you look left, what do you see here, guys? What do you see here? Clean demand zone. It's a clean demand zone, guys. This pair will be happy to see it come to this level. Take liquidity from here. Lower time frame, maybe 15 minutes, you see an impulse. You see a break of market structure, rather. You see it this way. You see one will just shut up. The one that shut up and break market structure, that's the one that will correct for you to take your trade to the upside. It's as simple as that. We'll all be monitoring some of this pair. Take it. You know, it's going to be a very big swing trade next week, guys. Okay, because the analysis is spot on. Okay, so that's card CHF, card JPY. See, I told you when you're analyzing, try to look at area of liquidity. I took this trade and close it. Why? I said this corrective structure is against my rule. If it has come to this level here, good, I will have taken it. Like Euro JPY came to this level and we took it in our signal channel. Okay, we took it, even though we did not hold it much before we close it. All right, but why do I think that this pair will move to the upside? Well, pool of liquidity, guys, at this level. A pool of liquidity. Many people will come here and say, oh, this has hit. When this hit trend line, it came down. When it hit trend line, it came down. When it hit trend line, it came down. That's how they were taught in a conventional way to trade. But it is wrong. When we see this, what we look at is let this market break this level and take liquidity from top here. Simple. Let it come and take liquidity from top here. And in that case, you have a 3 waves up here, you have 3 waves in the middle, and then you have impulse. Okay, that will have been A, or that will be A, B, and C. So if this pair can come over here, guys, just wait. You can see that the momentum to the upside is not much. Let it squeeze, pull up, come down, correction, come down. That's how we want it to be. And if it doesn't happen like that, we are not trading it. Is that okay now? All right, card yen, silver, limits. Most people don't trade this. Then, all right, Euro card. Euro card. What we are looking for is simple, the same system or the same principle I told you. When you have a consolidation right here, you have a consolidation. Let me show you. If you have an impulse, you have a consolidation here. You know, many of you were taught that you should just take it at this resistance to take a sell. That's a conventional way of trading. It doesn't work with modern reality. So what you should expect is that first and foremost, if you take a fib of this impulse, okay, you can see right here 50 to 61.8 is here. So you now be checking that market would like to gravitate towards area of liquidity. That's just the truth. And where's the area of liquidity, guys? The area of liquidity lies right here, not down here. This is a retail trader zone. This is where retail trader buy and sell, buy and sell, buy and sell, wasting your time. Okay, so we need to wait to see this come over here, grab liquidity and supply here, look for sell opportunity to the downside right here. Okay, that's how I want us to trade Euro card. Good. Okay, good. If you look at good on a weekly time frame, can you see on a weekly time frame? You can see what I'm seeing. Candlestick pattern that matter after a pullback. And I told you some days ago when this was going up bullishly, what did I tell you? I told you something, guys, that check here. What do you see? Do you see good breaking this? So I told you I was not going to participate in the buy. I would rather wait for sell because this good cannot make this. Elliott wave theory will tell you this is structure for the upside. But because we have developed some other techniques and methodology that guide us more appropriately, we do know that these are area levels of liquidity. Liquidity lies below here because these are equal low. This is what is called equal low liquidity, that this guy will come here, break this low before it moves to the upside. If it does not catch this liquidity here, gold is not going to move to the upside. For 3 weeks now, I've been saying it. And can you see I'm vindicated? There's bearish engulfing candlestick pattern on a weekly. So we go to daily. So anytime you see it there on a weekly, just know that the market is not going to come above here. So all you are looking for is corrective structure on a daily between this level and this level. And once it's come over here, look for something that look like this right here. Okay, look at it here. Once it happens, go to 1 hour time frame of 15 minutes. Look at the impulse generated as a result of the daily signal. Look for the corrective structure and then take your trade. You're not going to you're not going to risk more than 10 or 15 pips, guys, with this system. Okay, you can see the way we are balancing it one after the other. All right, so now this one Euro JPY weekly time frame, you can see that from weekly time frame I usually have my bias of what I want to do. Look at it. Can you see? Let me show you. Look at this candle, guys. Look at this candle. Doji, you call it. All right, and after you see engulfing candlestick pattern. Okay, bullish engulfing. All right, so this last candle you see that is bearish is a correction. It's a correction for it to make a move to the upside. And you can see the bearish candle is even appearing with a wick. That shows rejection. We are rejecting to the upside. Is that okay now? So when you go to daily, you see that right here on the daily time frame, you have this to contend with, guys. You have this to contend with. This is something for you to contend with first and foremost. So in order to resolve that puzzle, all you need to do is you want this market to still give us a correction back here. Okay, and if you go to 1 hour time frame, we have to take care of that bullish, of that bearish engulfing candlestick pattern. We have to take care of it first. Okay, we have to take care of it first. And then how do we approach the market on Monday? Do not expect that market will just open on a Sunday night and it will continue to flow to the downside. No, it can just do something like this, begin to go up, boom, correction, boom. So that's how you look at it. But this is a complete corrective structure for more downside rather. It can also give you a wedge-like pattern. What is a wedge-like pattern? All right, it can give you something like this. Can you see? This has become a wedge. It will now throw up, take liquidity from the top, throw down. You now do corrective structure. This is your trade. Because you can see where this one is developing right at resistance. That's where it's developing. And of course, you know that AUD/JPY and AUD/USD, they move in the same direction. And we are forecasting a corrective structure for AUD/USD. So the possibility is there that instead of this one to make a corrective structure, it will make a wedge and throw up to take liquidity here and then throw down. So that's how you look at the market. Oil. Oil on a weekly time frame. Okay, there's nothing very important that we see on a weekly. On a daily time frame, where we are going to have some push up because this is a pattern that give me a sense of push up. So, but where are we going to push up? How are we going to get involved? It's simple. You see, I take the middle point of my engulfing pattern. Okay, take my middle point. I look for corrective structure. Okay, you may have this correction, this before you now push down. Okay, then you take your buy to the upside. BTC USD. Okay, I've already given you this markup, guys, that BTC USD is expected to correct to the upside. It's expected to be corrected to the upside because this flow to the downside is massive, guys. So after the correction, go back to 1 hour or 30 minutes or 15 minutes. Look for impulse correction, take your trade. I'm not sure this correction can be completed this weekend. We have to enter into next week, possibly Wednesday or Thursday, before you have that corrective structure completed. All right. So last but not the least, US30 on weekly time frame. On weekly time frame, guys. See, still bullish. There is no sign of bearish on weekly time frame. On daily time frame, okay, I'm beginning to see something fishing, but right here, this is still nothing. Okay, because you're having this powerful move. So for the fact that this one just came down does not mean that we are reversing. So you should take note of that. Okay, doesn't mean that we are reversing. But if market open, we have the first candle like this, the next candle like this, then begin to think that it has stayed indecisively at the current position. Then since you have an engulfing candlestick pattern here, go to 1 hour corrective structure and boom to the downside. Is that okay now? So that's my outlook for this week. That's my outlook for this week. Does anybody have any question? Does anybody have any question?
Good afternoon, sir.
All right.
Yes, sir. Please, I would love to understand how to identify our collective waves correctly. Like, it is so amazing to know how it is easy for you to draw or to identify collective structure. But once market open and you want to continue analyzing the chart, I find it difficult to identify collective structures.
Yes. Okay. Thank you. Yeah. It's very easy. It's very easy to identify corrective structure. All you have to do is to go back to the video on corrective structure. I'll have to go there right now. Video corrective structure. Go to my video. Okay. Go to my channel. Okay. So right here, manage video. I'm going to give you the solution to the problem you just highlighted. Okay. So right here, you have ELLIOTT wave theory here. You cannot understand the corrective structure if you don't come to learn ELLIOTT wave theory. Okay, you start with the ELLIOTT wave theory. This is the corrective structure, zigzag and flat corrective structure. Go through it, guys. You see top, no. You see ELLIOTT wave theory, triangle and combination corrective structure. What I've given you here, guys, is the guideline. If you don't know those guidelines, there's no way you can understand what we talk about. Look at ELLIOTT wave theory, motif waves, ELLIOTT wave theory, general overview of the theory. These are the things that you must study. If you don't study all these things, there is nothing I say to you here. There is no way I analyze the market that you will understand it. You are not going to understand it until you understand the theory. Everything that happens in the market is governed by theory. And it's either you know that theory and understand the market, or you don't know it and you don't understand the market. So it's not magic. And it's very easy, it's not difficult, but you must go and study the theory. All right. If I just answer you here and show you how to do it here without you understanding the theory, it's still the same thing. Is that okay now, guys? Okay. Are you okay now? Another question?
Yes, good afternoon, sir.
Yeah.
Sir, please, I want you to go back to Euro GBP.
Euro GBP.
Yes, weekly, then daily.
Okay. All right.
Okay, please. This can you zoom in a little? Zoom in a little. No, zoom. No, not zoom in. Or zoom in. I want to show something. It's okay. No, it's okay. It's okay. This last leg, after this impulse downwards, I'm looking at it like an ending diagonal.
What is the name of the person talking?
Ali M, sir.
Okay, I've given you a notation. You can draw on the chart.
Okay, sir. I'm looking at this.
Quickly, please.
It's not coming up. Okay, I've seen it. Okay, fine. I'm looking at this triangle as an ending diagonal, then this as a break of structure with a correction for more upside.
Okay.
I don't know. That's my own opinion. I know it's different from what you did.
Where is the triangle? Where is the triangle? Where is the triangle you are talking about? Where is the diagonal you are talking about? Can you draw the diagonal?
This one.
Clear what you have before and draw the diagonal.
Okay, let me clear them.
Okay, I think let me just.
Okay, see. Okay, yeah.
Where? No. Let me come in, please.
All right.
Let me come in. So what
I got your explanation first. Very well. I'm just trying to see how my own is very wrong.
No, you can't look at the market like that. Okay.
Okay, sir.
You can't look at the market like that. We have to clear this. Coming. Okay. Clear this one. Yes. Okay. So now let me this is my thought, this is my opinion, guys. You see this on a weekly time frame. You see this. What is the impulse that generated this correction, guys? This was it. Where is the normal place we expect a correction to come? Here we are.
50 to 60, sir.
Yes, here we are. And then you know the reason why this market has refused to make a higher high for a long time. The reason is that since year 2016, 6 years now, it's not able to make a higher high. Why is it not able to make a higher high? Because this market has been bounded in a range and has not had opportunity to grab liquidity at the right fib level for it to move to the upside. The opportunity has not been there, but now it's gradually creating the opportunity. And how is the opportunity being created? How is it being created? I'll show you now. What you are seeing as a diagonal is not a diagonal. You can see that here you have a three-wave structure in the middle. Okay, and right here you have a move down. Right here you have another move down. This is a complete three-wave structure. And then right here you have a sharp wave A. And then right here you have 1, 2, 3, 4, 5. You have 1. You have 1, 2, 3, 4, and 5. This complete structure. Okay, at the middle here, what you have here is what is called a running flat. And this is a running flat. Okay, a running flat is after impulse, you have this, you have this, you have with A up, with B to break it, and with C does not get to the top. This is a running flat, guys. Okay, it's a running flat. And after this running flat, you're going to get to see a move to the downside. This, what is happening here is what I drew here is exactly what's happening here. And right here, you have a three-wave move to the downside, three-wave move to the downside, corrective structure in the middle, and you are expecting a three-wave move to the downside here. By the time this three-wave move to the downside is complete, then you must have caught liquidity right at the fib level of 61.8, 50 to 61.8 that I drew for you here. Okay, and after you have grabbed it right here, you have grabbed it. Yes, this one is now happy to make a move to the upside. And then why do we think that this move to the downside will come? The reason why we think it will come is that it's in line with the current fundamental realities between GBP and Euro. Of course, we know both currencies are under pressure, but Euro is under more pressure than GBP. Truth be told, okay, truth be told, all right? So because of that, I have this bias to the downside, and we can see that existence of a sell pressure confirm the end of corrective structure, okay? Right here, the corrective structure is deemed to have been over because we are having a lot of pressure to the downside right here. See the pressure here, see the correction, see the pressure here, see the correction. We need the pressure here again until we break this low and begin to move up again. Do you understand now? So that is the perspective I have. That's my perspective concerning the market. And if you go to 1 hour time frame, you see, go to 1 hour time frame, I just want to see, a kind of liquidity, the kind of structure we saw here. I told you when this was here, I told you that we are going to see consolidation, we are going to see a market throw up, take liquidity, throw down, correction, and down. That's exactly what I told you. Okay, the same thing we want to see here. We want to see this market because it's going to go further downside. So we want it to throw up, take liquidity down, corrective structure down. That is the structure we want to see. And by the time it does that, you now see that this low, this length is equal to this length. And then this is our, trade to the downside. That is how, in my humble opinion, that's how I want to see the market to play. All right. I don't see Euro, GBP moving to the upside. I don't know. I don't know the fundamental that will drive it to the upside. It's not going to work. And we have to test something. We have to test a hidden bearish divergence in this kind of structure. Okay, you see here, right here, you have a lower high. Okay, you see it here. Okay, what do you notice? You see here, you see here, you see here. Come over here, come over here, come over here. Is it in any way making this one right here? Is it in any way making a lower high? No. Can you see that the high for this gentleman here, the high of this gentleman here, you see the high of this gentleman here is slightly more than the height of this gentleman here. Can you see? All right. Can you see? Can you see clearly? Look at it. It's rising up. It's rising up. My indicator is rising up. Okay. And what happened to this one? It's coming down. It's coming down. Can you see? So what is it telling me? It's telling me that the kind of cell that you have here and the one you have here is small compared to the one you will have here, because I'm already, the market is already giving me a premium price right here. That is why the RSI is right at the top, higher than this level, higher than this level, higher than this level, higher than this level. That is the meaning of what is called bearish hidden divergence. And that is a confirmation that this is going to move to the downside. Look at the stochastic right there at the top. Do you understand? All I want to see in lower time frame is simple. All I want to see is consolidation right here. I want to see consolidation. I want to see a throw up, a throw down, three-wave structure, boom, to the downside. This is what I want to see, guys. If I see this, I don't waste my time. Put my trigger here. Stop loss is usually like 15, 20 pips. If you catch a good entry, that will be the trade. Is that okay now? But let's see. Anything can happen in the market. Let's see how it plays out. But in the final analysis, even if it doesn't play out the way I'm talking, I'm still not going to lose trade based on it, because it is my daily time frame that will confirm that we are going down or we are going up. So if we are going to go up, I'm not going to get confirmation for a sell. Is that okay now? I'm not going to get confirmation for a sell. That's just the trick. All right. So any other question or no question? All right. So
it's clear beyond all that.
You said what?
It's clear beyond all that, sir. Thank you.
Correct. Thank you. So thank you all for coming. Have a lovely weekend. Bye.
Sir, please, you will need the record.
No problem. I'll post on the YouTube.
All right. Thank you, sir.